VTI, VOO, and SCHB are three popular index funds, but they each track different market segments and have unique advantages. Choosing the right one depends on your investment goals, risk tolerance, and preference for diversification. VTI, or the Vanguard Total Stock Market ETF, is designed to track the entire U.S. stock market. It includes large-cap, mid-cap, and small-cap stocks, offering exposure to thousands of companies. This broad diversification makes it a great choice for investors who want a single fund that captures the entire U.S. economy. VTI is known for its low expense ratio, strong long-term performance, and balanced risk profile. Since it includes smaller companies, it can be more volatile than funds focused only on large-cap stocks, but it also has greater growth potential. VOO, or the Vanguard S&P 500 ETF, tracks the S&P 500 index, which includes the 500 largest publicly traded U.S. companies. This fund focuses only on large-cap stocks, making it less volatile than VTI. Since the S&P 500 represents the biggest and most stable companies like Apple, Microsoft, and Amazon, it tends to perform well over time. VOO has a low expense ratio and strong historical returns, making it a popular choice for long-term investors. However, because it excludes mid- and small-cap stocks, it may not capture the full growth potential of the broader market. SCHB, or the Schwab U.S. Broad Market ETF, is very similar to VTI. It also tracks the total U.S. stock market, covering large-, mid-, and small-cap stocks. However, SCHB has slightly fewer holdings than VTI, meaning it's not quite as diversified. It is managed by Charles Schwab and has an extremely low expense ratio, making it a cost-effective option for investors who want exposure to the entire market. While the performance difference between SCHB and VTI is minimal, some investors prefer SCHB because of Schwab's commission-free trading options for their brokerage customers. Now, let's compare them side by side. First, diversification. VTI and SCHB provide exposure to the entire U.S. stock market, while VOO only tracks the S&P 500. If you want the most diversification, VTI and SCHB are the better choices. Next, performance and risk. Historically, large-cap stocks have been more stable, which makes VOO slightly less volatile than VTI or SCHB. However, VTI and SCHB offer more growth potential because they include mid- and small-cap stocks. If you prefer stability, VOO is the safer bet. If you want the chance for higher returns, VTI or SCHB might be better. What about costs? All three ETFs have very low expense ratios, but SCHB is often the cheapest. The difference is minimal, so cost shouldn't be a major deciding factor. Now, let's talk about provider preference. VTI and VOO are both from Vanguard, known for long-term investing and low-cost index funds. SCHB is from Charles Schwab, which offers commission-free trading for its customers. If you already have an account with one of these providers, that might influence your choice. So which one is the better choice? If you want the most diversified portfolio with exposure to all U.S. stocks, VTI is the best option. If you prefer to focus only on the top 500 companies with less volatility, VOO is the way to go. If you want a total market ETF with extremely low costs and you use Schwab for investing, SCHB is a great alternative to VTI. The best choice depends on your investment strategy and personal preference.